Welcome back to Global Technical Analysis. This is the second to last module in this entire course. It's an 8-part series. And really what we're going to be talking about today is putting it together, forming your own trading strategy, and identifying a map. Basically, rules that you can stick to. I'll be tying this in with Six Sigma, one of the most time-tested things that pilots use, basically as a checklist before they jet out. And essentially what this is doing is belt and suspenders, right? So this kind of concept of not having any single points of failure. And that's the whole idea of building a trading system, not just going, okay, I'm purely going to trade off the Bollinger Bands. We're not saying I'm purely going to trade off exponential moving averages here, right? The whole point with the series is not only to basically help you understand the fundamentals so you can go out and trade in capital markets, or at least in the beginning, paper trade in capital markets, test your strategy, test your kind of knowledge base that you've accumulated throughout this course. Kind of in the beginning, I recommended going through this course, if you have the stomach for it. I personally do when I'm consuming a content, is 2x speed, and then maybe returning back, going back on 1x speed or 1.5x speed, and kind of finding what fits best for you. So understanding the concepts overall of what I'm talking about, how technical analysis really works. Obviously, there's more advanced things that we can get into, and I'll probably be doing additional videos outside of these 8 modules, because again, today's module is really focused on building this trading strategy. And then the last module is putting it all together. So all the things that we learned, kind of combining all of it and really being confident going out there in the market. And also, if you run into any problems, if you run into any struggles, how, you can always join the Telegram group, link down below in the description, where you can always reach out if you have any questions as far as trading goes. And maybe I won't be able to personally help you, but I hope that, with that kind of community of people, it's kind of like a hive mind, right? That's kind of my idea, is having this hive of kind of education and information that all people have used, whether they're a commodity trader, whether they're a crypto trader, stock trader, whatever it is. It's very important to understand these skills, even if you don't want to trade, right? I think technical analysis is one of these things where it doesn't matter where you are in the world, doesn't matter what your age is, your religion, your ethnicity, none of these things matter. Especially that's a beautiful thing about crypto, right? Is the one reason that I think obviously people should be very, very careful trading crypto. They should definitely understand the risk management strategies that I talk about throughout the series. And they should start out paper trading only. Do only start out paper trading. That's the most important thing. But the awesome thing about that is you have decentralized exchanges where you can essentially use some leverage and margin capabilities, and you don't have to do KYC and these other things. So whereas commodities, you have to be like a licensed commodity trader and all these different things, similar with kind of some sort of things in the stock market and Forex market. But now with kind of more fintech applications, there are ways to have easier forms of entry with this. I think it's obviously the easiest time in history to learn trading, number one, and then to also actually go out and execute in capital markets, number two. And putting those things together is the main thing. So again, today we're going to talk about all those things and more. The number one thing that I talked about in the beginning of the series: get your trading journal. Get it, leather journal, physical. That way you can write down, okay, this is my trading journal for today. I did paper trading on British pound, Japanese yen. I also tested it on gold, US dollar, or silver, US dollar. Then I was in the crypto market. I was looking at Bitcoin USD. Maybe you were looking at, I don't know, like what American Express is doing on the stock market. All these different things. Use a trading journal. I have multiple of them. Since I travel, I'm currently here on the Black Sea in Batumi, Georgia. Probably next one I record, I'll be in Armenia, in Yerevan, Armenia, the capital city. But since I travel so much, I have some of these at home. But the interesting thing that I personally do is I have a digital recording of all of my notes that I've ever taken. So I have like a personal inventory where I literally just have my phone, I record it. So even though I have these notes in my library back home, basically I'm able to access them anywhere in the world. And even if I lose everything, I know how to get back on all these documents I have. So I have all these things. Using Six Sigma, using belt and suspenders, not having any single points of failure is very, very important, because, what if it gets stolen, or what if something happens? I don't know. The worst case scenario that I can think of is a fire happens in your book collection, or your notes are destroyed. So that's why having a digital copy is very, very nice, storing them on things like the cloud, and maybe even using some of blockchain platforms that kind of allow you to do a decentralized storage like ColdStack or Filecoin. So lots of this intro, but we'll hop right into it. So essentially, throughout this course, I've been giving you tools to add to your tool belt, different indicators, different trading patterns, different things like volume, and you could use open interest. All of these different things I've talked about in this course are very important, right? So again, these are all tools in the tool belt, but the whole point of learning these is not just to understand, moving averages in a vacuum, or not just to understand Bollinger Bands in a vacuum, or triangles in a vacuum or flags in a vacuum, is to add them all together holistically, take the best, leave the rest, test out new things. And if you take this seriously, if you take trading seriously, this can be the best thing for you, because obviously you don't want to get overburdened with all of the different things, right? You don't want to try and use 100 different indicators all at once. You kind of want to combine these and find what works best for you. And one of the best ways to do this is back test it and then also paper trade it moving forward. So basically, if you can identify a strategy, and I'll talk about it, just a basic one, for example, here that I've done a video on in the past, I think is an easy one to kind of do on lower time frames. But the main thing you want to identify first is what time frames are you going to trade on. So are you going to be a swing trader where you're looking at like maybe the daily, the weekly, and the monthly time frame, or are you going to do something like day trading, where with day trading, I personally like the 5-minute and the 1 hour time frame. That is what I prefer. I like to identify the trend on the 1 hour. Well, first I like to zoom out, just look at, like on this chart, for example, we're zoomed all the way out to 1993. Yeah, 1993 here with Japanese yen, Great British pound. So we have a massive amount of a price action, right, to go over. This is basically identifying the macro trend, identifying what is this chart has done. And with this, that's where you draw out, okay, the key support and resistance levels, which was basically, I think it was like the third thing that I talked about in this course. It was in the third module, but let's just go through this really quick, just for a quick example. So just laying out these key support and resistance lines. Again, as you know, what you're looking for here is multiple points of confluence. So we see, and really all of these are ranges, right? So you use a rectangle if you're just starting out. I talked about this at the beginning of the course, but this is really our bottom level right here. You saw a wick down to here. We saw 2 touch points there. We saw it close to happening here, but I would say really this like range of price action in between the 127 and the 117. That's where I would be looking at. There's also a nice range here that we have. So we kind of bounced off here. So again, just for the example of the how to draw it with the range right here. So this is another way you can do it, is go here. So like that, okay, you see. But again, if you're more advanced, you can just use the lines, because when you draw out the lines, remember, there's no exact points of technical analysis, especially not in the macro chart, right? It's really always a range. So these lines represent a rectangle. Always remember that. So you see multiple touch points here. These are basically data points. So again, identifying your time frames, and then your data points is all things with the very, very basic version of this is key support and resistance levels. And then we go into things like indicators, things like moving averages, volume. You can use whatever it is, Bollinger Bands, all these different things. And then you go into things like patterns and a bit more advanced strategies and indicators. And yeah, we'll talk about all throughout that through this video. So let's go here. Let's draw one more level, or actually 2 more levels, just very, very basic levels right here. So you saw essentially here we wicked down here, we got rejected here. Here we got rejected. We saw just kind of some consolidation right here. We got rejected here, dumped down, got rejected here, pushed down, support level back here, pushed up, got rejected again, boom, back down. And then we may be going up to get rejected here. But I think this last level is important to keep in mind here with the Great British Pound and Japanese yen is that level right there. So you can always extend that out, right? So this is how I like to draw out basically the skeleton of my trading. I actually, before I even made this course, I was helping out this awesome guy that I met, Edmund from Kosovo. Shout out to Edmund, really awesome guy. If you're ever in Prizren, shoot me a message, or leave a comment in this video. And Edmund's the best person in Kosovo to show you around, whether it's a driving trip or a place to stay in Kosovo. He grew up in Prizren, but beautiful country, incredible guy. But I remember I was actually helping him with some technical analysis things, and the way that I described it then, kind of the way that we kind of like talk back and forth about it, is like the skeleton, right? So drawing out the skeleton of your charts. So this is the very basic. So before you go and trade an asset, you want to understand, okay, in the macro view, where are we at, right? Because if you only have this amount of price history to see, you're completely blinded, right? So you want to be able to zoom out, okay, whether it's Bitcoin, whether it's a stock, whether it's a commodity, whether it's here like in a Forex chart, zoom out, get the big picture, and then you can go from there. So that's the main thing. Once you've identified what time frames you want to trade on. So once you've identified what time frames you want to trade on, then you go to it. So let's just use my example of the 1 hour and the 5-minute chart on a day trading system, right? So this is kind of my map for like a day trading system. Very, very simple strategy. I've back tested this. I've used it and profited multiple times. It's using things, just the Bollinger Bands. I do like to use volume with it as well. You can always add other indicators in there, but to keep it very, very simple, again, you don't want to get too burdened down with all these tools in the tool belt. You want to find, okay, is my hammer my favorite tool? Is the saw my favorite tool? What is it? And what am I aiming for, right? So if you're looking at building a cabin versus building an apartment complex, like these massive buildings here in Batumi, you need different tools, right? So everybody needs different tools based on what you're optimizing for. So first you have to ask yourself, okay, what am I optimizing for? Am I looking for long-term like swing trades? And obviously there's more things in between this, or short-term like day trading, right? So in this case, we're going to talk about day trading. Again, I'm not saying day trade. I'm saying this is an example. So right here, this is something that you can look for. And again, the reason that you craft your own, the reason that you don't want to listen to what other people's are, now you can use it for just learning what they do, maybe what works and what doesn't. But the reason that you always want to modify it to your own is because think about it, if this whole course was about me teaching you one trading strategy, everybody would be using the trading strategy, and that would screw up the price action, right? Especially on lower market cap things. Now, obviously, on on Bitcoin or on things like gold, you're not going to screw up the market by trading it like this. But if enough people use the same strategy, which like let's say there's an altcoin, like somebody's talking about trading, I don't know, like BNB, right? So Binance token versus US dollar, and everybody's using the same strategy because one person said, hey, this is the best strategy out there. Everybody go use it. This is a problem. You don't want to be like the herd of people. It's true. The saying goes, I think Thoreau said it, the mass of men lead lives of quiet desperation. What's called resignation is confirmed desperation. So you don't want to resignate to a life of desperation, right? A life of desperation is essentially saying, hey, this is out of my ability. I don't know how to trade. I don't know how to build my own strategy. I didn't watch the Global TA video. So if you know anyone who's struggling with trading, tell them to watch this series. Tell them to obviously start from the beginning, but work their way through because it's completely for free. It lays out literally everything you need to know. And if there's any additional things I need to add, I'm always open to updating this course, right? So throughout recording. And I started it in 2021 when I was in Turkey. And I've kind of continued it throughout all my different travels. Again, next Sunday will be the final episode, and then I will probably add more like supplemental bonus type content to the playlist. But anyways, continuing on here, I hope you understand kind of what I'm talking about, where you want to craft your own strategy, or at least maybe get ideas from other people, like how they maybe structure their strategy, like this example that I'm going to show you, and then move into building your own. So 1 hour time frame, 5 minute time frame. Again, on the 1 hour time frame, what I'm trying to identify is what is the overall trend. Okay, so the overall trend here with the Bollinger Bands, how you identify is if it's below this middle red line, we're in a bearish trend. So the bearish trajectory here, so starting out here on June 16th, following all the way to right, you could say right here to June 21st, was a bearish trajectory, right? So here, this is where we'd be looking for a short position because the trend is your friend. And obviously this is a relative term, right? But it's kind of one of these general rules that can be used as a true thing. But the trend is your friend. So you see here, we kept getting rejected down, rejecting down, getting rejected down, getting rejected down. And if you add something like the EMAs, you can see this a little bit better. But again, keeping it very, very simple, when it's bearish like this, it's below, you see this red line and this bottom green line. Right, so those are the two lines. Then you have the top lines here. If it's in this line, so this area, this is bearish. Now here, starting June 21st and going to, it was just within a day, right? We were in a bullish trajectory, right? So that would have been a nice little long position. But again, this is on the 1 hour. So the 1 hour is used to identify your trend. Ideally, what you're looking for is if you're going to do a short position. So if it's in the bearish trajectory, you can find a bearish engulfing candle. And this is on the 5 minute time frame. I'll show you that. And on the 1 hour price area, if it's bullish, so if the overall trend, like here, there's a bullish trend, here's a bearish trend, right? We've been in a bearish trend there, bearish trend here, bullish trend here, right? So you can see kind of these different things. That just identifying these, either is the market moving down or is it moving up, right? So that's kind of identifying it on the 1 hour time frame. Then you move into the 5 minute time frame, and this is where you look for your entry position. Remember, these are quick trades; these are in and out because you're not looking for a long term trade because you don't have enough price history. Now, I do like to use things. If you want to get a little bit more detail, we can add more things onto this trading strategy. But this is an example of how to set up a framework around this, kind of like a map, right? So again, I'll be talking about more things with Six Sigma throughout this, but I wanted to show you this example. And let's just say back here, where were we? We were talking about like June 16th, right? So let's go back to June 16th here and find this. Okay, so remember in June 16th, we were in this this bearish pattern, right? So a nice short position would be identifying on the top of the Bollinger Band. So again, if it's basically this strategy allows you to long or short in the market, but if you have on the 1 hour a bearish trend, what you're looking for is on the top of the Bollinger Bands. When it's overextended, a bearish engulfing candle. So a larger red candle following a smaller green candle. And I'll show you this right here. But again, remember in the past, we were talking about this on the 16th. So, okay, where could we have maybe identified a nice little entry position here for a short position? So this is a perfect example, right? So right here, literally this is, and obviously we're using past price targets. So I understand that. But this is showing you how to use the strategy, right? And then you can use it for the up-to-date trends, and always test it before you use the strategy, right? I'm not saying go out and use this exact strategy that I'm talking about, because again, you have a kind of this like confirmation bias. But this is a perfect example of an opportunity where, again, we were on the 1 hour, we were bearish, right? So we were in this area on the 1 hour, but in the 5 minutes, that's where we look for a short position when we're overextended on the top of the Bollinger Band. So like this, you don't want to trade it when it's here. You don't want to trade it when it's here in the middle. You want to trade it when it's overextended, right? Because the Bollinger Bands basically snap down. They're like rubber bands. This is where you see a large red candle right here. So I'll zoom in even more so it's even more easy to understand. You see a small green candle. We're looking at the body of the candle. So a small green candle right here, small bullish candle on the 5-minute time frame. Remember, each of these represent the price action in the 5-minute time frame. Then a large red candle. So that would be my short position entry. And I mean, this is a pretty good example of how this works, right? So no strategy works 100% of the time. Anyone that's telling you it does, they're lying to you. This is just not the case. Study history, right? So, I mean, the profits you could have made here are pretty ridiculous, right? Like this is, you zoom out and let's just say, I mean, you just pulled profits even like at these levels, like pulled 50% profit. Especially on these smaller time frames, what you're looking for is a bit higher leverage. So, you could have gone literally all the way down here and rode this whole thing to the bottom. But I mean, typically, if you're doing the 1 hour and 5-minute time frame, you would at least pull profits somewhere around, like I personally would say you're doing multiple of these trades a day, right? So if you're doing day trading, you're not just doing one trade a day. But I mean, look at that. That's a very, very nice gain, because you have to understand, like I would probably be doing about like 10% or 10x leverage, right? So that just made you 23% on your money. So multiple of those in a day, you get the point, right? Because you also have an extremely tight stop loss, right? The stop loss is tiny, 0.04%, because if this gets rejected, if it invalidates, you want to make sure you're exited out of the trade immediately. So that's an example of a short version of this. A bullish version of this would be, we can hop on here. Let's see if we see one on the Bitcoin chart. Here's a perfect example. So, well, first of all, let's go to the 5-minute, right? So, and again, you can switch around the time frames, do all these different things. But once I get done with this example, we'll talk about more about building your own strategy. But I just kind of wanted to show you how essentially what I'm doing here is finding multiple points of confluence, basically creating a rule. So every time I go in and trade, I stick to this rule. This is kind of using these ideas from Six Sigma, sticking to a rule. Obviously, Six Sigma is much more complicated, and I can talk about that here in a minute. But basically, yeah, it's very important to understand these things. I know it's a bit complicated, but I hope you watch the full thing so you understand this. So it's my chart here is a bit messy, but let's just say right here, right? So on the June 21st through June, basically on June 21st, we started this bearish trajectory, right? Because remember, and this is on the 1 hour time frame. Let's see. We basically dumped down here. Remember, we're bearish right here. But then we became bullish. So let's just use an example here. Well, let's just use now, actually. So now we're in this bullish trend, right? So we showed you that example of a short position. So this would have been where you were looking for a short position. And obviously, you're not, if you're actively trading this, you don't see the price history in front of it. You just see the current price history. So that's why we're using this right now. So what would we identify as an entry position if we want to do a quick little entry on the 5 minutes? So we've identified it's bullish on the 1 hour. Now let's go to the 5-minute time frame. Here, okay, so, and we obviously don't have anything, but ideally what we'd like to see is, and then I can show you one when we go back, but we would like to see this, where we're a bit overextended on, like here on the Bollinger Bands. Then we see a small red candle followed by a big green candle. That would be our entry. We'd want to do a nice long position, maybe to the top of the Bollinger Bands, quick trades in and out with a very tight stop loss. So again, remember on these small time frames, you can literally do, an hour trade or a 15-minute trade and then make nice little profits, enter and exit the market. And obviously it's all, what the heck? It's all relative to, I'm not sure what just happened. I'm sorry. I think my face just exited this. You don't need my face necessarily. Okay. So I do apologize for that. Man, that stinks. I don't know how to get it back. Okay, it's all good. It's all good. So let's move on here. If we're looking for a bullish engulfing candle right here, this would be a good example of it, right? So this is a small red candle followed by a larger green candle here. That would be our entry position because we're somewhat we're not quite overextended, but there's probably a better example. Like you could use, obviously on the 1 hour it has to be there, but like this is a great example. So we're basically overextended here. Then you could enter in here and make that nice long position there. Okay, so that's the main thing as far as that example. Now, again, building your own strategy. We'll talk about this more in next Sunday's video, basically putting it all together. But again, identify the time frames you want to trade on. So test it. Maybe are you optimizing for short-term trades, like maybe multiple trades a day, where again you're starting out using it on paper. So write down, okay, in your trading journal. Again, I apologize for the camera going out. What are you actually? What is the time frames that you're looking at? And this can be maybe your test. Maybe give it a name, like you're doing the bullish engulfing trading strategy, right? So in this one that I just talked about, we have our time frames, the 5 minute and 1 hour. Then we have multiple data points. So our data points are using the 1 hour. What is the actual trend? So what's the trajectory? Then we can add on, if we want to add some exponential moving averages in, maybe we want to start using volume a bit more. Maybe we want to identify some bullish engulfing, some bull flags, some bear flags. We can use things like symmetrical triangles. We can use W patterns. We can use double tops. We can use head and shoulders. All these things I've talked about throughout this series, basically adding more tools into your tool belt, but then sticking to those tools and testing your strategy. And then, okay, if it's working, double down, see, okay, is this working when I'm day trading it? When I back test it, hey, this thing works. But how can I improve it, right? So constantly be looking to iterate and improve. But the main thing is when you actually go and you're putting real money at the stake, that is where you have to stick with your rules. That's why, with Six Sigma, that's why pilots use it on a day-to-day basis. And I'll just read you, I have kind of my own personal definition, but this official definition, and I'll also have this link down below in the description, is basically laying out that Six Sigma is a method that provides organizational tools to improve the capability of their business process. This increase in performance and decrease in process variation helps to lead defect reduction and improvement in profits, employee morale, and quality in products or services. So this is the example of a business version of Six Sigma. But again, it can be literally applied to anything. I highly recommend, if you don't understand Six Sigma, I know some of these books may seem dumb, but it's actually really, really great. I personally don't have it. I kind of learned about Six Sigma at a relatively early age, but I think someone who's brand new to it, hey, get Six Sigma for Dummies, the book, or get like a digital version. Maybe I can make a dedicated video to Six Sigma as like a bonus episode. Let me know in the comments if you would like to see that. But you can apply things like Lean Six Sigma. You can get really as advanced or as basic as you want. But basically, it allows you to have a very analyzed and controlled methodology when it comes to just kind of rules in a business and in flights, whatever it is. Basically, so every day you stick with these set of rules. You don't deviate from these things, right? So after you're flying, maybe you can build a new set of rules. You can improve on it. Say, hey, this is working great. This isn't working great. This will save me time. This is maybe wasting time. So take the best, leave the rest. Really, as Abraham Lincoln says, again, learn from everybody, even if it's what not to do. So that's kind of what I was talking about with, you don't want to use someone else's trading strategy like the one that I just laid out, but rather you can learn from it and learn, hey, I don't like this. I do like this. Adding all these different things together. But again, guys, the main thing here with the trading strategy is identifying trends, identifying what time frames you're going to work on, and custom building it for yourself. So again, just like with art, right? So as Pablo Picasso says, good artists copy, great artists steal, which is very true. But in this case, you can steal some different things, right? So you can steal the Bollinger Bands. You can steal the things like identifying descending wedges, right? So like right here, let's just show you this, right? So this is a nice little descending wedge. You could draw this out. You could do it like this. I would say like that. So you have 4 touch points, right? So bop, 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 boom. So now we can use the exact same thing up here, right? So this is another descending wedge if it wants to pull out for me. Here we go. Let's see. Here. And that would be your breakout point. So bop, 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 boom. That was our breakout, right? So this is where you can combine things like, okay, if this is a long-term trader, and this is on the 5 minutes, this would even be a nice little example of a short-term trade where you would do a nice little long position here. You'd want volume confirmed breakout support, and you'd want to use multiple points of confluence. That's the one thing I want you to understand and take away from this video is really identifying all these strategies, putting them all together, and building your own map, building your own road, And that's the biggest thing, right? Throughout this course, go back and watch. If you want to learn more about head and shoulders, I can make a bonus video on it. If you want to learn more about Fibonacci retracements, which by the way, I love using Fibonacci retracements, and you can still have these basic trading strategies, these basic trading maps that can be as simple or as advanced as you want. But the beautiful thing is then you can start using things once you understand like things like XABDC patterns, which again, I can make a bonus video on, or if you want to use things like Fibonacci retracements, right? So here's a great example of using it in this price action we're seeing here, right? So just in the short term on the 5-minute, ideally you're using Fibonacci's on a different level, like more long-term levels. But look, basic, right? So we were using the Bollinger Bands. We can also pull out the EMA here, right? So now we're using volume. We're using one trend, right? So the trend here was the descending wedge. We're using Bollinger Bands, exponential moving averages, the 20, the 50, the 100, and the 200-day moving average. And right here, when all of this kind of hit this confluence, that's where you can do a trade setup. And then how do you do the price targets? Well, that's where you could use Fibonacci extensions, right? So that's also where you can do things like, so for example, here we saw previously, this is a level that we got rejected off of, right? So right here we got rejected. Probably if you zoom back, it's similar. But right here, it's right in between the 618 and this level. So that might be a nice place to pull profits, right? Because that's where we got rejected. So maybe you would set a conditional order to sell 50% of the position here. Then we dip back down. Maybe you have a nice little another long position and you sell more here. So and then you use a nice little maybe horizontal array here, just same as we did below. But you can see what I'm talking about, right? So you're putting all these tools together, and again, you can become very, very basic with it. But once you start adding more of these tools to your tool belt, you can be much more confident in understanding how to trade in capital markets. And this is just with Forex, right? We can do this with Bitcoin. We can do this with all these different things. But yeah, that's basically it for today's module. I'm really sorry about the camera cutting out. I must have accidentally clicked X when I was walking you through some of these earlier strategies. But I don't want to go too long here. If you have any questions, anything you want to see covered in the final module, I do not want to you guys to feel like, hey, I'm just going to like cut you off after module 8. No, I plan to probably, maybe if it's a year from now, maybe it's 2 years from now, do an updated version of this course. Probably do some bonus content within this course, like how to use things like Gann squares, how to use things like ghost feeds, projections. Any of these things, if you're interested in, if you want to understand Elliott waves, if you want to understand the sin line, if you understand the triangle patterns, the 3 drive patterns, or whatever it is, pitchforks, shift pitchforks, fib speed retracement arcs, all these different things. I want to empower you. Yes, that you obviously can request that I do a video on it, but hey, go look it up. You guys are getting the same information that I am, right? Technical analysis is really objective for the most part once you understand how to use indicators like this properly. Go look up, a great way that talks about this with Forex is something called baby pips. It's very, very basic, but just YouTube, how to use a fib wedge, right? Like how do you use these different things? And again, if you have any questions on this, I probably will end up doing like a Fibonacci focused like bonus video, or maybe even it'll be like a bonus module, in this video series. But I'm curious what you guys want to see. That's basically all for this video. Again, join the Telegram group, link down below. Leave me comments what you thought about this series. If you have any questions, again, I can always redo these and do like, global TA 2.0, right? This is an example of like, let's say 6 months from now, you guys, one of these modules you want to see a redone version of, because this is just me kind of going through a rough draft of the series. You have to keep in mind that it takes a lot of my time, and I'm putting this out 100% for free. So I appreciate it if you support me. I'm not asking for any money or anything like that. So many people charge a ridiculous amount of money for courses like this. And I think it's very important to get this information out there for free so anyone can watch it, no matter where you are in the world, how much money you make, whatever it is. None of these things matter. What matters is the skill, the actual information, and the education, right? So that's all for this one. If you enjoyed it, again, like the video, comment down below, hit the subscribe button, notification bell, all so you never miss a new video. You can see this nice little W pattern we have here, right? So that's basically all for this one. If you enjoyed it, again, do all those things. Like, subscribe button, all, invest global, and until next time.